Joining us now in a CNBC exclusive, Match Group President and CFO Gary Swindler. Gary, talk to us about these numbers. The fact that you see this decline in Tinder users, that really raises some concerns about whether we've hit saturation in the U.S. market and how much the price increases are having a negative impact there. What are you seeing?
Well, we definitely haven't hit saturation in the U.S. market or any market. I mean, there's still so many people out there who are single or who are dating, who aren't using dating apps. And we think everybody who's single should be using dating apps. They work great and people enjoy the experience. So we want to see that penetration of overall users keep increasing. We've got lots of room to do that in developed markets like the US or Europe and less developed markets like Asia. And we've just got to keep driving our products to make that happen. And we have the runway to do it, no question about it.
So talk to us a little bit about your outlook now, both for that top line revenue growth and also for usage trends going forward.
Well, look, we've made a tremendous amount of progress. I think Q2 was a great one for us. We had some tougher quarters the last few. We've been executing so much better. The team at our flagship app, Tinder, is really executing well. Great progress. We were able to beat numbers across the board in Q2. We were able to raise revenue expectations for Q3 and for the rest of the year. So from a financial perspective, it was really a very strong quarter for us across the board. We feel great about it, and we just got to keep going.
You raised your margin expectations, now looking for margin expansion this year. What is going to be driving that? Is that really just about the price increases? And how does that impact your long-term outlook or longer-term outlook on margin potential?
Well, look, I think we have room to expand margins over time. So we're a very profitable business that's growing very nicely as well now, which is a great combination, a rare combination in the tech space of profitability and growth. And what we've done is we've made some smart decisions. We've reduced costs across the board. We've just been a little bit more financially disciplined, and you're seeing the real benefits of that start to take hold. Plus, the revenue growth at a high margin business like Tinder is really helping overall company margins. So again, the combination of revenue growth and being smart on cost is really driving a springboard effect, which we're starting to see in the numbers as well, able to raise margin expectations for the full year, and it gives me optimism longer term as well.
Hey, Gary, the street's, obsessed with the idea that a pressured consumer is going to start to cut back on something, whether that's high-end dining or the movies or travel. And I guess I'm wondering where you would put online dating, in that stack. Is it where's the elasticity on that kind of thing?
I have seen an incredible amount of resilience in our business throughout this economic cycle. We really haven't seen significant impact on our business. It's a small purchase. It's a purchase that makes people very happy. For $15, $20 a month, they can meet people and get out and date. And I think people are going to continue to pay for it. So we don't see people cutting back on the dating apps at all.